Hello, everybody. It's Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, aka Mr. Valuation, bringing you another 2-minute drill, Lessons in Valuation subscriber request series. Remember, these are stocks that subscribers asked me to look at. And one that I was asked quite a few times was the retailer Kohls. And what I think is real interesting, by just instantly looking at FastGraphs, there's so much I can learn about a company. Number one, Kohls was kind of a steady grower till we came into COVID. And of course, like a lot of retailers, COVID really hit them very hard. You can see that their earnings collapsed here, and they also slashed their dividend from $2.68 a share in fiscal year 2020, which is a January fiscal year, down to 70 cents in fiscal year 2021. Now they've started increasing that dividend a little, but they're still not back to where they were. And then they hit another couple of down years and instituted another dividend cut. Now, when I put weekly closing prices on the graph, you can see how earnings determine market price. The company's operating results are so much more important than short-term price action. Here we clearly see what I would consider to be a valid drop in value and price and even return. If I would have bought the stock here when it looked fairly valued, and it would have been done okay for a few years. But then once we've run into all these earnings issues, I would have ended up losing an annualized rate of return of 3.96%, negative rate of return over time. The growth factor would have been I lost 88%, 87.9% of the money. Now, looking at it from the future point of view, analysts are still expecting a lot of trouble for this current fiscal year. And I would also add that even though the analysts are saying that, this company has a really bad scorecard, meaning that they've missed estimates most of the time. So even if these estimates are negative, they could be worse than what the analysts are currently suggesting because of the choppy record this company's had in the last several years. I hope you notice that when you're using FastGraphs, you always want to run the different time frames so that you get a real accurate perspective of what's going on. And remember, you can only invest in the future, not the past. Anyway, this has been Chuck Carnevale, aka Mr. Valuation. Hope you enjoyed this video. If you did, give me a like. Ring the bell so you can see more videos like this. And thank you for requesting some of these stocks. It's really been interesting to provide these lessons in valuation. And to me, I couldn't even imagine investing in stocks without the benefit FastGraphs offers. Thanks for watching.